All right, let's talk about something that can feel super intimidating. Taxes. But I'm going to prove to you that it doesn't have to be. We are going to break down how personal taxes work in the simplest way possible. Let's just dive right in.
And that quote right there, that is our mission today. We are not getting lost in the weeds talking about crazy offshore schemes or stuff only billionaires do. Nope. This is all about giving you the core ideas so you can handle your own taxes and feel totally confident about it.
So why do taxes feel so complicated? Well, honestly, it's a huge bummer, but most of us never learn this stuff in school. So you land your first real job, you get that first paycheck, and you're left trying to figure it all out on your own. Of course it feels overwhelming.
But here's the thing. The number one rule of the whole game is incredibly simple. It's just this. If you earn money in a year, you owe the government a percentage of it. That's it. That's the foundation for everything else. And this game is played on a set schedule. The tax year starts January 1st and ends on December 31st. Any money you make in that time frame is what matters. Then you've got until around the middle of April of the next year to file what's basically your final scorecard with the government.
So, how much are we talking about? How much do you actually owe? Well, it changes based on where you live and how much you make. But a really good, simple rule of thumb, just think about 20%. Now, tax websites will figure out the exact number down to the penny for you, but 20% is a great number to just keep in the back of your head. Okay, so you might be thinking, wait, do I have to stash away 20% of every single paycheck myself? Well, the good news is, for most of us with a regular job, the answer is a big no. The system is actually pretty smart and has this automated process that does all the heavy lifting for you.
And it's all thanks to something called withholding. It just means that when your boss pays you, they don't give you all your money at once. First, they take out a little bit, an estimate of your taxes, and they send that money straight to the government for you. You're basically prepaying your tax bill all year long.
So this is exactly how it works. You earn your full salary, your gross pay, but before that cash ever hits your bank account, your employer holds back the estimated tax and sends it off. What's left over is what you actually get, your take-home pay. And honestly, this is a lifesaver because it stops you from accidentally spending the money you're going to owe later. Let's just run through a super quick example to make it real. Imagine you land a job that pays a salary of $50,000 a year. Okay, that's our starting point, our gross income.
Now, your employer might guess that your tax rate is around, let's say, 10%. It's just an estimate, right? But based on that, they'd hold back about $5,000 over the whole year and send it off to the government.
So the money that actually lands in your bank account, what you live on, would be $45,000. And because of this whole withholding system, you really don't have to stress about taxes day to day. You pretty much just go about your life until the year ends and you get your official tax forms in the mail, like your W-2. So when spring rolls around, it's time for that yearly check-in. It's time to file your tax return. And the whole point of this is to officially tell the government what you made. And then, and this is the best part, to legally shrink that number down as much as you possibly can. And the main way you do that is with something called deductions. Just think of them as government-approved discounts. You get to subtract them from your total income. So you might have made $50,000, but with deductions, the government only taxes you as if you made, say, $35,000. And a lower taxable income means you pay less in tax. It's that direct.
Now, you've got two main options here. Most people just take the standard deduction. It's a big, flattened amount that anyone can subtract, no questions asked, super simple. Or if you have a ton of specific expenses, you can list them all out. That's called itemizing. But here's the thing, you don't even have to worry about which one to pick. Any decent tax software will automatically choose whichever one saves you the most money.
So, after all that's done, you get to the moment of truth. Your final taxable income is set, your total tax bill for the year is calculated, and it's time to see how you did.
The software does one last, simple comparison. It looks at the total amount your employer already paid for you during the year, and it compares that to the amount you actually owed after all your deductions. If you paid in more than you owed, boom, you get a refund. If you paid in a little less, you just owe the difference. Simple as that.
And that's pretty much the whole process. The only part that can seem tricky is knowing all the rules. But that's what the IRS-approved software is for. It just walks you through with simple questions. So unless you're, running a hedge fund or something crazy, you almost definitely don't need to pay an expensive accountant. Okay, so you've got the basics down. Now for the fun stuff. How can you legally pay even less in taxes? Now, while the really wild tricks are usually for the super rich, there are some seriously powerful ways for regular folks to save. So here are some of the heavy hitters that pretty much anyone can use. You can contribute to a 401k at work. You can write off losses if you invest in stocks or crypto. You can get a way lower tax rate just by holding your stocks for more than a year. And if you have a side hustle, you can reinvest your profits. Let's dig into a couple of these a little bit more.
Seriously, contributing to a 401k is probably the smartest thing you can do. The money you put in comes out of your paycheck before the government calculates your taxes, so you get this amazing 1-2 punch. First, it lowers your taxable income today, which means a smaller tax bill right now. And second, that money gets to grow for your retirement without being taxed along the way. It's a total win-win.
And for all you side hustlers out there, this is a great one. If you run a little business, you can reinvest your profits into things you need for the business. So check this out. Let's say your cleaning business makes $5,000 in profit. If you then go buy a new, top-of-the-line $5,000 vacuum cleaner, your taxable profit just dropped to zero. You owe no tax on that income, and you get a brand new piece of equipment.
So you might be sitting there thinking, why on earth is the US system so complicated? Well, here's a little secret. A lot of it is complex on purpose. The government actually uses the tax code as a tool to get us to do certain things, like buying a house or investing in solar panels, by offering tax breaks if we do them.
And hey, once you've got a handle on the 401k, there are a few other amazing tax-saving accounts you're definitely going to want to look into on your own. Things like Roth IRAs, health savings accounts or HSAs, and 529 plans for college. They all have their own special tax perks.
So there you have it. We've gone from earning to owing to filing all the way to saving. And hopefully, this makes the whole idea of taxes feel way, way more doable. And that just leaves me with one final question for you to think about. What is the most confusing part of taxes for you?